What's going on, family? Guess what, man? This is not fun advice. We're gonna be going over some charts, and then we're gonna check out uh, what the Fed rate hike means for you, the consumer. And as you can see, yesterday we had a huge reaction from the market. So we got, I'm just kind of zoom in for you. We got Apple, big rejection candle. We got Tesla, big engulfing bearish candle. And then we got Google, big rejection candle. And then we can go to the S&P, huge rejection candle on the chart. So we can see this is not, you will have follow through after this move. There will be some blood shed. There will be follow through on this move. So don't get confused and think the market is just going to rally all back up. That is, they did this at the very last minute of the day. So at the close, at the 3 o'clock candle, 5 minutes before the 3 o'clock candle, they completely rejected. And then from 3 to 4, this is all you saw at the close. And then maybe 15, 20 minutes, they just finished this off, and it just kept dumping, kept dumping, kept dumping all the way down. So there is a gap down here to be filled on this chart. So expect that to be filled within the coming weeks. We should see follow through today. So today we got uh, Thursday, big Thursday. We usually have a big move for the markets. And oh man, I'm gonna pull this up real quick, and I'm gonna show you what this actually means for the consumer. Them bailing out the banks, so they saved the banks for one, and then we had this huge reaction off the 25 point uh, rate hike. So we can just check this out real quick. So this is, dude, man, I just deleted it again. All right, try this one more time. All right. With the Fed, 25 basis points in the rate hike. So I'm going to kind of go over this real quick. This is a CNBC. So just going to talk about how this affects credit cards. So the higher rate from the 25 basis points, um, this is what we got. So the annual percent rates are now 20% on average. So it's up. It was 16.3% a year ago. So people's credit cards average has went up to 20%. I think it's 21%. But that's what's doing for credit cards. So it's going to be harder to borrow easy money. So home loans, we got the 15, 30-year mortgage, the fixed rates. So the average rate sits up at 6.6%. It was 4.4%. So it was even lower when I purchased my home. So then we got the home equity loans. Average rate for that is 7.76%. It was 3.96% a year ago, just a year ago. Then we got the auto loans. So the auto loans from these rate hikes, man, is up 6.48% from 4% a year ago. So you paying almost 6.5% on your car loan when you go to get you a loan for a car, and they make adjustments so you can get the car, and you got to pay a monthly fee. That's the average. You're paying 6.5%, man. So this is big for the consumer. We want to see consumer spending slow. So we can see that the rate hikes actually did something. So that's what we're looking to see. Now we're expecting unemployment to spike once again. So once we see this unemployment spike, then they can pause on the rate because as of right now, they're going to continue, um, these rate hikes. So, man, it's just some volatile market. I'm gonna just kind of go over the trading day for yesterday, and I'm gonna show you what I saw. And all right, so unemployment. Um, you're trying to get employment up to about 4%. So the current rate of unemployment is at 3.6%. So they're trying to at least 2 million more people have to lose their jobs. That's what they're expecting. So that's what the Fed is trying to do. At least 2 million people have to be out of a job, and the consumer spending has to slow in order for them to pause on the rate hike. So that's what they're expecting, man. So I'm gonna kind of get into these charts real quick, and I'm gonna show you what I saw yesterday. I will be trading today. Um, I'll be expecting a lot of volatility. So this is what I pretty much saw yesterday. So this was the price action. So we got none but sideways action for the entire day up until I think 2 o'clock. It's about 2 o'clock. They started this fiasco here. Nothing but the huge move up and then huge move down and then huge move up and then huge move down. And they bounced at this critical level that they bounced yesterday. So this is where they bounced yesterday, the same level they bounced. So if you're looking for longs, this would be the place to buy right off this zone here on up. This was a huge move. This was about a 30, almost a 40-point move back up, 30 points. And then they just dumped all the way back down where they're supposed to go. But this initial move was a trap. So the initial move, um, I was looking for the bounce up, but they kind of shook folks out with this candle right here. I don't know what this was. It was just like I don't know. They came all the way down and they bounced all the way back up. And then it came back down and then they closed right where price high of the day was, previous high of the day. And then it just spiked all the way up. So this was a potential entry if you got in on a smaller time frame, because you got this huge spike up. It came back, stopped folks out, and then if they broke above this candle here, this was a perfect entry. You could have bought on the engulfing entry all the way up to the highs. I probably would have took profit up here at the highs and then called it a day. But this move right here was so unexpected. I didn't expect this move. So this huge push down. I thought they were going to continue going up to 40.50, but they stopped right here at my resistance. And I didn't even pay attention to that. But this move was so huge. I did manage to get in on the engulfing entry on this move. So I was able to make my money back. And then they bounced back up and then dumped. So I didn't pay attention. I didn't think they were going to stop here at this 380 level, but they did. They just hammered up real quickly and aggressively. It's a perfect buying opportunity. Beautiful trades, man. You could have capitalized on both sides. So beautiful trades, man. If you caught these moves, congratulations, man. I hope you guys stay green. The market just opened, and I'll definitely see you guys tomorrow. Hit like, subscribe for me. I'll see you guys in the Discord.